Bitcoin is special because it's an asset without an issuer. And why would you want an asset without an issuer? Because you're a company that doesn't want to trust any other company, or you're a country that doesn't want to trust any other country, or you're a saver that wants to store your money for 200 years, and you don't expect any company to last 200 years, and you don't expect any government to last 200 years. You just want your family to be rich forever. And so Bitcoin appeals to the people that want immortal capital. If you think about money, money decomposes into currency and capital. So if you live in Argentina and by law you're required to pay your tax bill in pesos, you're going to need ARS. You're going to need local currency. And if the currency is losing 20, 30, 40% of its value a year, then you would hold that for 4 weeks. Then if you needed money for the next 4 weeks to 4 years, call that midterm money, you'd probably want to buy the dollar. So you would have in your checking account USD. You wouldn't hold Bolivar, you wouldn't hold Naira, you wouldn't hold any of the really weak collapsing currencies. You wouldn't hold any Syrian or Afghan or Iraqi currency. So in that case, you always want to hold the US dollar. But if you need to hold the money from 4 years to 400 years, there is no institution or wealthy individual that would ever claim that the majority of their assets are held in dollars or pesos. They're holding capital assets. And those capital assets are split between 3 things. They're either holding bonds. You might be holding corporate bonds. You might be holding treasury bonds. Or they're holding real estate. You're probably owning a building or property or a home or some other tangible physical asset. Or you're holding private equity. I own a company. Or public equity. I have a portfolio of Magnificent Seven stocks or S&P index or something. So think about all the wealthiest people in the world. Elon Musk, Jeff Bezos, Mark Zuckerberg. What percentage of their wealth is US dollars? It's not even 1%, right? So Bitcoin doesn't compete with the dollar. Bitcoin competes with capital assets in the world, right? And there are $450 trillion of those capital assets. So think you own a Nigerian warehouse. You own 1,000 acres in Siberia. You own a private portfolio of Chinese stocks, right? You own a bar of gold, right? Why do you own these things? Because you had to put your money somewhere. So Bitcoin is replacing or competing with those things. If you look at the M2 money supply, I think the US dollar was showing as like 13, maybe 17% of that. And the primary competitors of the dollar are CNY, Euro, and JPY, Yen, Euro, and Chinese currency. So as the stable coin, as the digital currency backed by the dollar starts to circulate, that number is going to go from 17% to 30%, right? And what we're doing is we're really competing with other world currencies. And then the Bitcoin asset is less than 1%. And as it grows, if Bitcoin goes to $13 million a coin, then Bitcoin will go from 0.5% or 20, 30 basis points of the world's capital assets to 13% of the world's capital assets. It will still compete with real estate, equity, and bonds, but it will emerge as like a monetary index for long-term money. And so that's why it's important to understand this idea of digital commodity, because the use case of a digital commodity is not capital creation. That's why all the altcoiners, that's why they don't get, if you have zero money, you can't buy Bitcoin. So if you have zero money, but you're a podcaster, you need to issue a token to raise money. So capital creation is a use case of a token. The use case of a digital commodity is capital preservation and appreciation. If you already have money and you want to store your money for 100 years without worrying about risk, then you want to put it in a savings account. And so traditionally, the king commodity as a long-term money was gold. And what happens is gold demonetizes silver, and silver demonetizes copper, and copper demonetizes glass beads, and they all demonetize the giant stone coin of the Yap people or bales of tobacco. And so Gresham's law says the strongest money wins. In the end, there can be just one. We're all going to go to the strongest form of money. So the strongest form of long-term money, which I'll call capital, is Bitcoin right now. And all these other assets are going to be traded in for Bitcoin. And there's no point creating a second or a third Bitcoin because there's only one network that's going to win. The rest are just going to collapse against it. But the real point here is you want a commodity to be a store of value, and it needs to be an asset without an issuer. And so if you look at all these asset classes, what you have is digital tokens, an asset with an issuer with very light regulatory touch. You can issue it overnight. A digital currency is an asset with an issuer, but it's just pegged to a nation state currency. A digital security is an asset with an issuer, but it's really tokenized stocks or bonds. So it's like BlackRock releasing tokenized Apple shares or BlackRock releasing tokenized S&P index. It would be a token that circulates on a crypto exchange at the speed of light 24/7 globally, but it does have an issuer. And Bitcoin is special because it's an asset without an issuer. And why would you want an asset without an issuer? Because you're a company that doesn't want to trust any other company, or you're a country that doesn't want to trust any other country, or you're a saver that wants to store your money for 200 years, and you don't expect any company to last 200 years, and you don't expect any government to last 200 years. You just want your family to be rich forever. And so Bitcoin appeals to the people that want immortal capital. The rule ought to be the issuers have an obligation to not lie, cheat, and steal. They're responsible for the damage they do. The exchanges should have the ability to trade these things at the speed of light with anybody or anything, any machine. And then they should have obligations. Don't lie, cheat, and steal. Don't assume a conflict of interest. And then the holders ought to have a right to self-custody. You ought to be able to own your assets, custody your assets, and transfer your assets freely. So I think that what we all agree with is there ought to be no AML KYC frictions on asset transfer, because that destroys the utility of all these digital assets. And to the extent that you want to enforce consumer protections or investor protections, you should put the obligations on the issuers, and that way the economy starts to grow very, very rapidly.
In your plan, the U.S. should acquire 5 to 25% of the total Bitcoin supply by 2035 to generate between $16 to $81 trillion by 2045. I'm wondering, what has been the reception of your plan at the White House by U.S. President Donald Trump? And I'd like to hear you talk about why this is a national security issue.
I think the last 2 weeks have been extraordinary for Bitcoin and for the strategic Bitcoin reserve, because momentum is really building. 2 weeks ago, there were 3 priorities, or there were 3 things talked about in the digital assets universe. A stablecoin act, right? The Genius bill, and a bill to create stable coins and issue them in the U.S. And that really addresses the digital currency asset class. And then there's discussion of a market structure bill, and that's to create an entire digital assets framework, presumably to issue something akin to digital tokens or tokenized securities, digital securities. And then there is the Strategic Bitcoin Bill, or the Bitcoin Act. That was the third priority. And it was a question mark of where that was in DC. There was support, but people were wondering. What happened in the past 2 weeks is the Strategic Bitcoin Reserve got elevated to a primary, if not the primary priority, with the executive order. So the president created it. And I think there are some very important things that happened. On Thursday night, about a week ago, the president issued the executive order creating the Strategic Bitcoin Reserve. And in the executive order, designated just Bitcoin to go in the reserve, said we should never, ever sell it. Don't sell the Bitcoin. And then directed the Secretary of Commerce and Treasury to look for budget neutral ways to acquire more Bitcoin. That was the strongest endorsement of any asset, I don't know, in 100 years, I think, by a president of the United States. I don't, you could imagine if the president has said, we're going to, I'm directing the government to acquire silver and never sell it, and I want to buy more silver, or pick any asset, it would have been an extraordinary announcement. I think that was followed up by the Digital Assets Summit. And in the Digital Assets Summit, the president reiterated those points, and the Secretary of the Treasury and the Secretary of Commerce and Small Business Administration all were present and reiterated their support. That actually was quite amazing, along with all of the industry leaders being in one place at one time, and of uniform mind.